Hello and welcome to this short webinar on how to incorporate a limited company, where we will go briefly through the main points of the process of forming your own limited company. Look at the cost of doing it, the addresses you need when you set up a company, because there are technically 3 of them, shareholding and how that works, and we'll also look at your interface with Companies House and the Taxman. So, to incorporate a company online, first of all, you register with the Government Gateway account you start on the Gov website actually, and then it takes you to Companies House website, where you create a Government Gateway account for your fledgling company and a password. That is your portal to all things to do with the company. Registering for PAYE if you do that, registering for corporation tax, which you will probably do unless it's dormant. The Government Gateway is the way in. You need the number, you need the password. They will email it to you, but save it somewhere safe. So the cost is £50 to do it online, £71 if you do it on the old paper IN01 form. There'll be 2-factor authentication along the way, so you'll need an email address and a phone, and you need the ability to pay, debit card or PayPal. Those are the 2 means of payment. As long as you've got those things, that's the early statements they make. These are things you need, and you're good to go. So you need a unique name once you get into the process. So you cannot have a limited company that's got the same name as another limited company. And you should not be misleading and try and sound like somebody else either. That's just no way forward at all. You need, for the addresses, remember I said there were 3. There's a registered office address for the company. That's an official legal thing. The company has a registered office address. It doesn't have to be where it trades. It doesn't have to be where you live. It's an official the company's address at which documents may be served is what it is. You have a service address for director or directors, and you have a residential address for the director or directors. The residential address, doesn't appear on the public record. The others do. The others are publicly available, unless you're in, for example, a witness protection scheme, in which case you can apply to Companies House to have your address withheld. And there is also a thing called the Default Memorandum and Articles. It used to be known as the Mem and Arts. The Articles of Association of a small limited company have now been standardized, and they're on Companies House website. You tick a box to accept them. That is largely why this is a quick, easy process, because otherwise you would have to have, back in the day, a lawyer draw them together for you, or get a form from legal stationers and spend a happy 2 days writing your company's name in various spaces. So the Default Memorandum and Articles are a big step forward. For standard limited companies, you just accept the stuff that is attached to Companies House website, and you move forward. I should say that any of these things we are able to help you with if you want to walk through it online, so to speak. Having decided where the company lives, its registered office address, and your address, and the director's service address, which is probably the same as your residential address, you set up the shareholding. Standard is 1, 10 or 100, but you can have 17 or 32, or you can have any number you want. Again, the nominal value of shares is £1. You can have any value you want. This is a nominal process. You're obliged to pay up for your shares when you sell the company and in certain other circumstances. But most people tend to incorporate a small company and leave it as a nominal valuation. Also, ordinary shares, which again is the default position, they have the same rights to voting and to dividend. So all the shares in the company will have the same rights. Generally speaking, they're all held by a single person or possibly 2 people. But if you want more than ordinary shares, that's starting to get sophisticated, and you'll need to speak to somebody who can advise you on the specialised areas that you'll be getting into there. The shareholders don't have to be directors, and the directors don't have to be shareholders. And back in the day, you had to have at least 1 director and a company secretary. That is no longer the case. Single-person companies are very, very common indeed. A single director, single shareholder, extremely common. So there are various deadlines and dates attached to your behaviour as a limited company. Remember, the company is not you. You've created a legal entity, so it is not you. It has its own rights, obligations, etc. It has to get in to Companies House a confirmation statement on the anniversary of its incorporation, confirming the directors' names, addresses, confirming the shareholding. It's literally 2 to 3 minutes ticking boxes online. But that's very, very important, because that maintains your ownership of the company. And without that, they will close the company down and take it away from you. So your confirmation statement is very important. More mundane issues, if you like, corporation tax. The corporation tax return, if you're trading. If you're trading, corporation tax return is due 12 months after your year end, and that is not the government year end, not the April to April year end. That's the company's own year end, because remember, it is a legal entity in its own right and it has its own trading year. So 12 months after its year end, the CT return is due, and 9 months and 1 day after the year end, the payment is due. Most people tend to do the whole thing with a 9-month deadline because you've got to do the corporation tax return to generate the knowledge that lets you pay your tax. But those are technically the dates. You must keep records for 6 full years, as you must if you're a sole trader. That is 6 complete years. So if we're halfway through a year, you've got half a year and 6 full years behind it. And only when the year ticks over can you throw away the old year if you want to. All incoming, all outgoings, bank statements, your diary of where you've been and what you did when you were there. These are the things you need to keep. Same sort of record keeping as for a sole trader, but it's rather more stringent, and there is a definite feel of more legality and more seriousness to owning a limited company. There is a thing called micro-entity reporting exclusions. So if you're doing your own corporation tax return, if you're using, I don't know, Excel or one of the software bookkeeping packages, you will be almost certainly a micro-entity. A micro-entity, by HMRC's definition, is anybody with less than 632,000 turnover and some other criteria as well, but 632,000 tends to rule a lot of small businesses out of that because it is quite a serious piece of turnover. But if you're under that, you have to do a corporation tax return, but you can opt to withhold your profit and loss statement. You can withhold a lot of information from being public. You still have to do them, but you don't have to have them published. So there are reporting exclusions if you're a micro, which is a relatively recent thing from HMRC, and makes life much easier and much more private for small companies. So the reporting issues, there are some details around that, but broadly speaking, those are your major reporting issues. But keep good records. And that brings us to the end of this short webinar. I stress short because there is a little bit more to it, but those are the main points. So if you want help with any of this, the contact details are there on the screen. So get in touch with us and we'll help you with the process. I hope this was useful, and I wish you all the very best of luck with your new businesses.